Today, Governor Ron DeSantis signed property insurance legislation hoping to stabilize Florida's market. Although Florida accounts for about 9% of the country's homeowners' claims, 79% of homeowners' insurance lawsuits are filed out of Florida. Republicans are touting the bill as the meatiest, beefiest property insurance reform in state history, but some lawmakers still have doubts about whether it will reignite Florida's smoldering market. Capitol reporter Forrest Saunders takes a look.
Well, we started the week right here in Tallahassee with a bunch of promises and a lot of pages, more than 100 of them, overhauling the state's property insurance code. What we're left with at the end of the week is a shiny new law and a lot of hope that it will deliver. The goal from the get-go was to stabilize the insurance market, bring in more private competition, and maybe premiums would drop.
This is an issue that has been roiling the state for decades.
The governor Friday signed that massive reform bill to try and make it happen, which hinges on the hope that capitalism will do its thing.
The best thing for a consumer is that if you can go out and make people compete for your business, if they have to do that, then they're going to give you better customer service. They're going to give you better rates. They're going to do all that.
The policy's two biggest gifts to insurers: $1 billion tax dollars to cut their reinsurance costs and reducing consumer incentives to sue.
I think finally they've stepped up and have tried to address them this year, but previous legislatures dropped the ball.
Former state senator Jeff Brandes has regularly sounded the alarm on property insurance. Now he's feeling like lawmakers are making progress.
Florida could not continue to be the most litigious state and the most hurricane-prone state and expect lower rates.
Some of the changes come online immediately, others in January. Even so, it'll take time for new insurers to arrive, new plans to start, and litigation to resolve. It has Republicans saying a rate drop might take between 18 months to upwards of 2 years. They vowed to hold insurers accountable, even bolstering the insurance regulator's office with $1.7 million.
We are going to hold their feet to the fire, and I mean that.
For Democrats, who almost universally rejected the policy, it remains a sore spot.
What we're doing is we're bailing out insurance companies.
All week, members called for mandated premium caps and rate freezes to no avail. Leader of the House Democrats, Fentress Driscoll, said in a Friday statement, quote, "How many people are going to lose their homes before this trickle-down plan offers any relief?" The new law also wants to return the state-backed carrier Citizens to its role as insurer of last resort. It has new competitive pricing regulations as well as requirements for flood insurance that will potentially shed thousands of policy carriers from the program over the next several years. The reason why? Well, Republicans say they want to limit the liability that taxpayers have in the event of another major storm. That's the latest out here at the Capitol. I'm Forrest Saunders reporting.